Okay, hi everyone. So I have today's presentation. We're going to go through the Wolfe wave structure theory and then setting it up in your TradingView platform, create the workspace necessary, and then talk about the time frames and the moving averages. This Wolfe wave structure that I'm going to be talking about today can be used for futures, U.S. equities, and the notorious shitcoins like Bitcoin, Rocket, whatever. I don't know those coins. But if you're interested in trading those, you can also use the Wolfe waves. So let's begin with the high-level theory. This presentation, at the end of this presentation, you should be able to create the workspace, know exactly which time frames you want to be using, and then know which moving averages to use for any one of these instruments. Let's begin with the high-level theory here. So basically, Wolfe waves, if you just think of it in terms of metaphors, there's going to be a battle between the bulls and the bears. Those are obviously market forces that are going to be determining the 52-week highs and the 52-week lows. That's what the bull and bear metaphors are used for. And then in a bull market, in a bear market, there's going to be momentum where people can leverage instruments and make fantastic gains, or also get into a little bit of trouble and also lose a lot of money. Now, if we're kind of just in the battle between watching the battle like this wolf, then Wolfe waves kind of help us identify oversold conditions or opportunistic trade setups where there's a high likelihood of getting a move higher or lower depending on the structure that is being presently shown at that time. Okay. Now, then the next question is so here in this image, you're seeing two animals, the bull and the bear on the left-hand side, they're fighting it out. And then on the right-hand side, you're looking at the a nice little cute, wolf here and waiting patiently, right? Because obviously the wolf can't compete with those two big animals. The wolf has to wait for a specific time to jump in there and then salvage, eat whatever it can eat after the battle. Okay, so let's begin with the structure. So the basic structure in the Wolfe wave is just a supply and demand curve. You already know a lot of people on YouTube or technical analysts will draw lines on the chart. Okay, and yes, the Wolfe waves draw lines, but these Wolfe waves draw lines based on specific triggers, and it works on supply and demand principles. Well, that's basically the idea, and they're real time in nature, and they are produced on pretty much any time frame wherever the pattern is being developed. So moving on here, the first Wolfe wave is the bullish Wolfe wave, and it's in Thinkorswim we have it set to yellow, and in this case in TradingView it's actually green. So I'll just change the shape of this to green, right? And then whatever price action happens within the two lines here, the green lines, then it's going to form this point in time called the apex. So it converges. And that's in theory where time and price is going to meet. So if you draw a vertical line up here straight up, that's where the price target is going to be, is expected to reach. So when we move forward here on the next slide, obviously these yellow lines should be green. What happens is the indicator of the Wolfe wave structure will start to index points of the price action pivoting from lows and highs. So 1, 2, 3, 4, 5. And once that happens, it will trigger buy signal after pivot 5. Okay, so this would be a bullish representation of a Wolfe wave on pretty much any time frame. Okay, we haven't talked about time frames yet. So then when the buy trigger is signaled, then there will be like an arrow, or in the trading view it just says bull entry, and that's where you would take an entry. And most of the time the Wolfe wave entries are pretty efficient, and then you obviously, if you can anticipate it to trigger before it actually triggers with confirmation, you will make a little bit more money, right? But they don't always work, right? And they can roll over. So there's a stop loss that is drawn on your trading view platform with a horizontal line. And if it breaks through that, then the Wolfe wave structure is invalid. Okay, just keep that in mind. However, if it does not drop below the stop loss, okay, usually it's at the entry of the Wolfe wave, buy entry. Then if it's bullish, then the indicator will also connect pivot 1 and 4 with a peripheral line, and that would be projected out into some period into the future. But realistically, it's where the apex right here, and you draw a horizontal line straight up. That is where your theoretical target projection is supposed to meet by with respect to time. So if this point in time and space is like February 19th, and then you draw a line straight up to the target projection line, which is the green perforated line here, then that is your target price by before that time or after that time. But in theory, it should be on that day. The Wolfe wave structure is also can represent bearish structures, especially when a series of 52-week highs are formed. They become more, they appear more often, and these are represented in TradingView as red colors. Okay, and the idea here is the same thing as the bullish Wolfe wave. They form an apex most of the time. And then at the apex, it'll reach the target projection if you extend the horizontal line. Right, so this is the horizontal line. Sorry, vertical line from the apex all the way down to 1 and 4. Okay, and once the price has reached the target projection, then the trade is over, and then you got to wait for the next Wolfe wave. So we have some examples here of Wolfe waves forming. This is for U.S. equities. Oh, this is actually for U.S. futures. So U.S. futures, this was an example of a 3-minute time frame showing a move up to the green peripheral line with bullish Wolfe wave. We have another one using a 78-minute time frame with Boeing, and here you can see that the moving averages and the Wolfe wave are kind of working quite nicely here, with the 21-day moving average represented as the yellow line. And here's another one for SHOP. You can see SHOP triggered a 78-minute Wolfe wave. It pulled back quite a bit, and you can see where the stop loss was created here right at the time of entry. So if the entry there was at the low there, 1,023, and it created a horizontal line. And if it broke that line, then the Wolfe wave would be invalid, but it's still stuck with it. And you can see the apex should have met the price of, should have reached a price target somewhere near like 1,200 or 1,100 right at the apex, but it doesn't always. It's just the theoretical, it gives you a time of reference where you should be positioning into contracts, or how long you should be holding it for, and then using the moving averages to help you understand if this is a beginning of a trend. And you can see the trend is starting to begin to move in the opposite direction on the 6-day moving average. Those are the green dots. Okay, so and then here we have some examples on. Okay, nothing much here for Roku. So now I'm going to go ahead and set up the Wolfe wave on TradingView. So I'm going to go to TradingView. And let's go to Bitcoin. And now what I want to do is I want to create my workspace. I'm going to set it up. So the first thing I want to do is create several windows. So maybe go to the top right here called select the layout. And I want a layout that has several windows. So this one produces, this layout has 2, 4, 6, 8 windows. Okay, and they're all currently set to the daily time frame. Now, I guess this is a good time to transition into time frame selection. So, it's a good, so for Wolfe waves, you should monitor as many time frames you can fit on your monitor, right? And have the chart, each window displaying as much information as you can. So here on the top left, what I want to do is I want to have it on the 1 minute. Well, let's just first maximize the daily and put well, actually, let's just pick my time frame. So 1 minute, and then I'll pick a 3 minute, and then I'll pick a 5 minute, and I'll pick a 15 minute, I'll pick a 30 minute, I'll pick a 70 minute, and then I'll pick a maybe 4 hour, and then maybe 195, and then pick a daily. Or you can pick, if you want a little bit more of a macro perspective, you can pick daily here, and then pick maybe a weekly. All right, so what's the thought process behind here? For the 1 minute and 3 minute, 5 minute and 15 minute, these are just kind of helping me understand the price action on the lower time frames, and then they're there because maybe there might be a quick scalping opportunity where a Wolfe wave will appear, and then I can stay in the trade for no longer than an hour. But it's good to have those lower time frames there just to kind of look for potential Wolfe waves that make that present a scalping opportunity for a short-term trade, like really short-term. The recommended time frames that I would suggest using is the 30-minute, 78-minute, and the daily time frame. Okay, and then the weekly will just keep things, help you manage, what the weekly candlestick pattern setup looks like, because we have a strategy candlestick combination that we use, which helps us understand a lot of the price action that's gone through the past and present week in each candle. We call it the BLT. So this actually looks like here on the weekly time frame, if we do some analysis on Bitcoin, it looks like Bitcoin is setting up for this BLT maybe this next week, the last week of February, if it remains remains this form. But anyways, that's not part of the course. So the time frame selection that you want to use, highly recommended, is the 30-minute, 78-minute, and the daily. Now, there will be other time frames that you will see the Wolfe waves, and if you take that specific time frame, be sure that you multiply the time frame by 3, and that's how long you are looking to hold that position for. For example, if I get a Wolfe wave on the daily time frame, then I multiply it by 3 because it's daily units. That means I should be holding the position for at least 3 days. And if that makes sense to you, if you see enough information and moving averages look like it's converging and trending and you want to hold it for 3 days, then that's the way you want to do it. If you want to hold it for, if you're using a 1 minute time frame, then you're holding it for, you know, anything for 3 minutes, right? And then if you're holding it, if you're trading it off the 5 minute time frame, then it's 15 minutes. And yeah, if you're doing it for the 30-minute time frame, that's 90 minutes. You get the point. All right, so once you have your time layout and your time frame selected, then we'll just take one window. Let's take the daily and then apply some moving averages. And why we want the moving averages is because these are going to be used as our targets. So we want to put at least 4 in there. So 1, 2, 3, 4, and then take out that. And you want to select the moving average, green, the first one, and then I like to use the circles here, and then let's make it bigger. Okay, so that's the 6-day moving average, and I want to create this, set this to 6. And you might be asking, why do we use a 6? Well, the reason why we use a 6 is you can see that when you plot the moving average on the 6, you can see that price tends to react a lot when it gets around that level. So I like to use the 6. Some people like to use the 8. If you like to use the 8, then just let's put on the 8 as well, right? So let's go ahead and put an 8. And then select the color. So I like to use this, and then maybe keep it aligned. Maybe apply some thickness. Okay, and that's the 8. And then the next one I want to use is the 21-day moving average using yellow. And I'll make that a little thicker. And then apply 21 here. Okay. And then the fourth one here, I'll use the 50-day moving average, right? So 50, I'll make that blue white. And keep it aligned, and then maybe just add some thickness. You can even create, I guess that's good enough. Yep. All right. So that's it. And then now you want to apply the Wolfe wave indicator. So you just type in Wolfe wave, and we are the first trading view. We're the first community to provide the Wolfe wave in TradingView. Okay, so you can just click that there, and then you should see 1.5 appear. And then you want to apply a couple of those there, because I'll tell you why. Okay, so this is basically what you have, and then so let's go ahead. So the moving averages, we have the 6, which is the green dot. We have the, let's make this blue. Let's make the 8-day moving average a little bit more easy to identify. I don't know, something like that. All right, so the moving averages are used for target prices. Okay, so if you're looking for targets, so here you can see Bitcoin is moving sharply through the 21, so then your target projection is going to be the 200-day, the 50-day moving average, right? And then any one of these things here that spike up, you know, those are really tough to kind of to predict. Like how detailed do you have to go to pick off like another $15 after making like a $3,000 move, right? So these moving averages are here because you want to use these as your target price projection. And actually, it's also recommended to add the 200-day moving average in case when it starts crashing, you want to know where the long-term moving average is. So let's add the 200 there. So let's make that red. And then type in 200. Okay, so yeah, so you can actually see that now with the 200, there's actually a target price of $4,955. 49,546 if this is going to trade, if Bitcoin is going to trade higher. Now for the Wolfe wave, what you want to do is you want to look at this and you see with the bullish colors is green and the red is bearish, and then what you want to pay attention to is the wave length. So 13 is just a length input parameter we use, and not all Wolfe waves are going to be captured. Actually, sorry, not all instruments or companies have the same trading personalities. So in order to accommodate that each company's personalities, you want to introduce as many different length Wolfe wavelengths to capture the volatility in for each company or each ticker. So I recommend 5. And then I recommend 33, and then 50. Okay. What's going on with this purple one? Which one is this moving average? Well, that one is the 9, so I just remove that, right? Yeah. Okay. But my 50 is gone. So let's put that in there again. So 50. Make that white. Okay. All right, so now with this, and finally add the TTM squeeze. So you can just add this squeeze pro indicator by MAC at 0. And then if you really want to get into a little bit more detail, add in a MACD, an oscillator. So you could use yeah, something like this, and I guess you don't really need the histogram there, you just need the MACD. And the input parameters would be 3, 14, and 16. Okay. All right, so that's basically all you really need for all the indicators in TradingView. So you got volume, you got TTM squeeze, and you got a MACD. All right, so what's next? You got to save this. So save your template. Here we go. Save the template for Wolfe wave specific or something, right? Wolfe wave example, and then save it. Okay, so once you've saved it, you've basically saved all the moving averages. You've saved the color scheme. You didn't save the time frame. We didn't select that. You have the volume, you have the squeeze, and then you have your oscillator. Okay, then now you go back, and then you can see that it is now displaying on the bottom left hand corner, but it's a little bit truncated. So maybe you have to figure out how many screens that you want to have here taking up the real estate. So you might need to maybe maximize it. So once you're comfortable with your setup, then what you want to do is you want to go to your other time frames and then just go to your Wolfe wave example, right? And then just apply it, and then see. So this is still the 1 minute time frame. And then I go to the 3 minute time frame, and then let's go and just So that's the star. So it's been favorited. So now I can just click on the W instead. And this one's not showing the Wolfe wave. Let's try to do this. I guess it's not able to display the oscillator there. So let's keep on doing that. So you can see here that the real estate of the screen is a bit of an issue. So maybe that's the number of windows is of 8 is not going to work, so maybe I'll just choose 6, and then maybe so here, let's take a look. That's missing my. So let's maybe take out the. Let's switch this up to be 30-minute. This is 78-minute, and then pick this as your daily, and then pick this one as your weekly. So yeah, here you go. So the moving averages. Let's take a look at this. Oh, exactly. Okay, so yeah, what I'm doing here is, this was the favorite, so now I gotta change this to be favorite, and then unselect this. Now I can just use the W here, and then do that again, and then do that again, and then do that again, and do it again. Okay, so now we have everything set up, displaying all the moving averages, TTM squeezes, and the oscillator. All right, so that's basically the setup. And now what you want to do is create a watch list. So we have a watch list of, actually I don't have a watch list of shitcoins, so maybe it's kind of hard to add BTC2. Okay, yeah, so I'll create a new watch list called Shitcoins, for example, right? And then I want to move all the ones from my watch list that are related to shitcoins. So let's go to this one. Let's move it to there. And then let's move this one to there. And then Elon Musk. Shiba. And I don't know what's some other shitcoins here. Let's put in somebody showed me Rose USDT. This one. Right? And then actually just go to my shitcoins right now. And then add it here. Rose. And then Phantom. Yeah, there's a lot of different ways of calculating the shitcoins. I would what I would recommend is, because I don't like, there has to be a reason why they create so many different pairs, right? So if you're gonna analyze Phantom, then you have to use the Wolfe for all of these. So you have to make your own watch list called Phantom, and then apply all of these here. Right, so let's actually do that. So I'm going to create a new watch list called Phantom. Okay, and what I realized here is Phantom's got so many different ways of calculating the price action, right? So you just want to just maybe add them all in there. Okay, so it's a dedicated watch list for just Phantom if you're into Phantom. So what you want to do next is then click on it, and then see, it should change when you click on the ticker, it should change the chart but they're not changing all at the same time. So I think that's because they need to be synced by symbol. All right, so now when I go through each one, not only are the time frames staying the same, what you want, all of your indicators that you've applied should stay static, but the symbol changes, and they should be relatively similar in price action, but because there's so many ways of calculating, you want to go through each one and see if a Wolfe wave appears. So here I found one on weekly, and yeah, so when you get the sell signal, you can see on the weekly time frame that's pretty bearish, and it's looking for a target down to 0.24 cents. When you trade the Wolfe waves, you want to trade it and take profits at these moving averages. So after it's moved from here to the 6 or the 8, you take profits, and then you look at the price action and then see if the next moving average, which is the 21-week moving average, is the next target, and then see if it's holding support here, because you obviously can see there's some sort of cluster of candles here. So that would be short-term support, and then it bounced, right? But it's not making a higher high, so it rolled over. So then now what it's saying, it's probably going to move down to the white line, and then if it really gets nasty, it's going to push all the way down to 24.50 cents, especially with this weekly TTM squeeze. So let's keep on going. So that's the weekly, bearish weekly phantom, and here on this calculation versus the Turkish lira, it's not showing anything, right? So you just want to have them all there and just kind of skim through them and see if you can find any patterns. So here, this is phantom versus Ethereum, and it's also showing it can go down to a lot lower than what it was showing versus the previous pair. But short-term wise, you can see that there's a scalping opportunity to make a couple of bucks, but you got to be careful. The gas fees might kill you, right? So here from to there, where that's the periphery to target line, it's showing that there's a potential move of 1%. So 1%, is that really worth? Is that going to pay? Is that going to overcome the gas fees, the commissions? Basically, is that going to be really worth your risk and reward? And probably you wouldn't want to take something that's going to return 1%. Okay, so when you look on the weekly time frame, for example, here, you can see that measuring the move from here to here, it's a 91% drop. So yeah, I don't know if you have any methods of shorting Phantom, but that's a pretty big dump. So it looks like Phantom is just in this is just kind of dropping, and we don't know how much longer it's going to drop. But until this Wolfe wave structure, I mean, on the weekly it's it's very bearish on the weekly, and then on the daily it's not showing anything. So if you don't have a bullish Wolfe wave on the daily or the 30-minute or 70-minute time frame, you're not really looking to open up a trade here, because right now it seems like the weekly time frame is kind of keeping price trading lower. And what you also want to do is, if you find something like a Wolfe wave, for instance, let's go to the shitcoins here. Let's say we go to Rose. Okay, let's say that on the 70-minute time frame you have a bullish Wolfe wave, and then it says, okay, well, the 2 and 4 and 1 and 3, they don't converge into an apex. So we don't really have a good idea when this is going to reach the periphery line. But let's say we want to measure what the expected move is. So 7%. So is 7% really worth is it really worth the trade? Like, is 7% something that you want to make on this particular setup? And what you want to do is you want to look at whether there's a TTM squeeze here. So there's no red dots forming The last red dot that formed, it triggered and sold rows off down for 3 cycles, 1, 2, and 3. Okay, and now it's displaying a green dot. Okay, green dots represent expansion. So price started to expand lower and drop down to 28 cents. Now the next time the price is going to expand is when it starts forming these red dots again. And when it expands, there is an opportunity for it to expand higher, since there's a Wolfe wave on the 70-minute time frame showing a 7.64% move. Now if that's something that you want to trade, then what you want to do is you want to wait for the red dots to appear and then start to position into it and expect a move, price to move above the green dot and then trend higher up to the 50-day moving average. Each moving average is your target price for managing risk. So if it let's say if you get in here at 29 cents and this is a red dot, you get in and then it moves up to the 21-day moving average at 31 cents, then you've effectively made about probably 4%. So you want to close off some positions here to manage risk, because you don't know if it's going to continue moving higher or if it's going to roll over and drop down even further. Okay. All right. So I hope this tutorial is going to provide some insight into trading the Wolfe waves using the TTM squeeze and an oscillator, and then using the perforated lines, which is basically connecting pivot 1 and 4 together and projecting it out, is going to help you understand where your price targets are likely to reach, and also using the moving average to take partial profits along the way. Thank you very much and have a great day.